friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to a new episode of Markets Tomorrow, and this is analysis for January 25th, Tuesday 2022. So it was bloodbath in the markets that happened today, and big sell-off, very big sell-off that happened on Friday, and it continued even more further today. That's exactly what happened, and it's clearly aligned to the global cues. That is what we can understand, right? So without wasting time, let's get into the details. So if you're not subscribed, please subscribe and share to your friends so that it helps all of us. And this pre-market analysis is for January 25th and Tuesday 2022, and it will be based on all of these parameters that we see on the left side. We'll be looking at the charts, and we would have additional data analysis and on all of these additional parameters that you see on the right side, and then we'll wrap up some actionables, real trades that can potentially work out. Price patterns. What is the candle? Look at this fall. Very rarely you get to see after the COVID wave 1 hit, that brought the market down. This is one of the another days where we had such big falls. Not that much, but right, big fall. And what was the fall? We'll see the details. Even BANKNIFTY. Look at the size of the candle. Then it itself indicates and tells you all the story, right? 3.5% it dropped, actually 600 points in single day from morning till afternoon sometime, right? 600 points Nifty. It's 600 points normally happens, even if it has to fall, it occurs probably in 2 weeks or probably 1 week max. But in a single day, 600 points got lost. That big was a sell-off. That's why it's a bloodbath, right? It reached even the 17,000K also from, and then it recovered to the last 1 hour in the closing of the day with the wide ridge bearish candle, but some wick, that indicates the bounce that happened from the support level. So, but it closed 2.6% down. That is single day 468 points down. Very rare days are there like this. We lose this much points in a single day. Big sell-off, right? So total the 5 days, if you look at, right, last 5 days, 1 2 3 4 5, right, 5 days, if you look at the sell-off is 7.5% down, right, just 5 days. Right? BANKNIFTY, some similar happened, not that intense, like comparatively, if you consider the point wise, like 3.3% of fall happened today. That's 1,200 points nearby single day. And then the last 1 hour it recovered, and then it formed a wide range bearish candle with a wick on the bottom, indicates a bounce, and it's 1.6% was the total down, which is less than half of the points, almost half the points was recovered in the BANKNIFTY. But in the case of Nifty, that much of recovery did not happen. 200 points recovered, not even 200, right? 150 points or something, 160, 70 points. So BANKNIFTY did a good bounce, but that was the kind of sell-off that happened. Obviously, when you're at that bottom, there will be some buying that happened from investors. That is exactly what happened. Whether it will sustain or not depends on how the US markets are closing today. That will come to know only tomorrow, right? Whether if there is any recovery that could be seen, then potentially there could be a chance. But there is no way of knowing that now. But as of now, it's big sell-off, and it is at a support. We'll see where the supports are. See, this is where it is. Why I said the support. So 17,000 is something that we had identified as a support, right? We had talked about a bearish divergence that is on the weekly, and the target for that was already in progress, and the target for that was 70,000 level, and the target is achieved. So it's still at a very comfortable support level only. Similarly, BANKNIFTY also is bounced from the support level and recovered half of it. Now, intraday price action, if you see, there's nothing much to here. It is trending big downfall, the last 1 hour recovery. Trending big downfall, the BANKNIFTY, last 1 hour recovery. Now, what is the Bollinger Bands telling? What story is it telling? The main thing is that the volatility, the distance from the median to the upside is not reduced that much, right? That means still you can expect high volatility, probably because of the free bets. That means there's no contraction that has happened much, but you can see that it is consolidating. The sideways bend has already happened on both. Here this indices Bank Nifty also, you can see the sideways bend is started, but the volatility can be big still until the contraction really happens and then the band squeezing, which is not happening, right? So there could be a sideways movement, but with high volatility is what it's indicating, right? Contraction has begun, but not complete, right? Next thing to look at is the support resistance level. So 17,000 support is where it bounced from. Now above that you have 7,200 resistance that will come in first, and 200 to 7,300 first has to be taken out, then 350 to 400 has to be taken out, then 500 to 600 has to be taken out, then above that 800 to 850 has to be taken out. Downside supports will be, first will be the 17,000, if that bridges then 16,800 to 16,900 because that's a Fibonacci 38, and then if that bridges 16,700 to 16,750. Similarly Bank Nifty, resistance upside remains 37,700 to 37,800, that band where it got resistance and hit. It even tried to hit that today. It moved up and slightly close to that and then ripped. So the first resistance is that. The second would be 38,000, 38,100. That 38,000 rounding number would be a big resistance, and after that you have 38,500 levels. Right? Beyond that you reach the 39,000 range. Huge resistance. Downside 36,900, 37,000 rounding number would be a place where it has taken the support right now. And after the bounce, it is settled at a support of 36,900 to 37,100, that range. So once again, the support's down. First it set about that. Then if that is breached again, the support will be 36,300 to 36,700, which is a Fibonacci level. And if that breaches, you come to the 36,000 kind of 35,900. Yeah, 36,000 would be a good support. Right, 35,600 to 36,000. That's a good wide range. And then that is breached, then you have 35,300, which is also another Fibonacci level. So downside, a lot of supports for the Bank Nifty. Upside, we have seen the resistance levels. Make a note of this in market on your trading charts as well. Now we were talking about momentum. Momentum was sideways till yesterday, but now it is turned bearish below 40 RSI. Bank Nifty also, but yeah, so the main thing is the momentum is lost on the Bank Nifty, definitely, right? It has gone below the moving average and on the RSI, and also the 60 below, but it's still sideways. So momentum is still not badly hurt as it has got hurt on the Nifty, right? So that is what Bank Nifty says. So just look to the peer zones on the short term and sideways on the medium term. So Bank Nifty, right? Yeah, actually, there's a small correction. I think, yeah. Before, instead of giving wrong information, I just want to confirm that. So, yes, yeah, that's correct. Yes, so that's the thing, right? So it's in the bearish zones on the short term. For both the indices and the medium term, it's sideways. Still not bearish. Medium term momentum is still not bearish, right? And even the Bank Nifty still not bearish. Right? It's sideways. That's what really gets momentum, right? More than as I said by mistake. So Nifty, right? I just have a doubt on that. Let me just quickly. This is what I wanted to check. Yeah, that's true. Confirmed. 1 second. Sorry about that. Right. So momentum is not that badly affected in the Bank Nifty, is what you can see. Now we talked about divergence yesterday on the weekly of the Nifty. There is a bearish divergence where the price is moving up and then the momentum is coming down. It is kind of confirmed, and today it has met the target of 70,000. We talked about this. So the momentum has, the divergence in the Nifty weekly has already met the target. It's weekly, but still, it met the target in a single day or 2 days. It has already started Friday itself. So that's about the momentum. Trend indicators are clearly, it had crossed over and is in the bear zones. Day my negative is dominating. Day my negative crossed over has happened. And Bank Nifty also the crossover happened. It had not happened, right? And the thing is, the trend has turned negative. Right. So trend has already turned negative on the Nifty. Bank Nifty it has turned to bearish trend, but not in the medium term, only short term. But medium term also the crossover has happened in the Nifty. So this is a summary. Bank Nifty, the medium term trend still has not crossed, right? But Nifty, medium term as well as short term, the trend has crossed out of the bear zones. Momentum, it is bearish, right? It is bearish on the Bank Nifty. It is bearish on the Nifty and it is not yet bearish on the Nifty. It is still sideways, right? And medium term, it is anyway sideways for both the indices. That's a wrap up. Now look at the volatility. This is what the action happened. 21% of up move, Nifty short, the VIX India VIX short up today. Now the VIX is 28.3, near to 23 level. It's super high. IV is 22.28, implied volatility, and implied volatility percentile is 84.27. That's huge. It's peak. Our soul actually. It's at the peak, and anytime there could be a chance that it can remain revert, but there is also it's a probability that it can further shoot up again. We never know that, but there is some probability that now that it has shot up this much, it can cool off because of the main reverting nature of the IV. But when the market, the fear and greed is too much, when big sell-off is happening across the globe, then there is also a possibility that it can further shoot up till the budget level to another 30, or it can go further up. You never know. So that's the problem with them. We can never judge when does that mean erosion happens exactly. That's why you have to be careful beyond a level. So it has today actually breached the level that it was trading since several months. It was in the range of 15 and 21. So that is over now. So now you have to be extremely careful. Cut short your positions as if you're trading, or non-trade at all until it cools off. Open interest analysis showing that 17,000 highest put rating, then you have 16,000, which is what 1,000 points range. Yesterday it was 18 and 17,000 points was the range. Today it is 17 and 16,000 points range, right? Where the maximum put rating is, maximum call rating is in at 18,000, and then 17,000 also has good enough of good amount of resistance. That is seen. 0.53 put call ratio is not bearish, not bullish also. Short beta is happening on the future and open interest. Bank Nifty 36,000 and 36,000 has got the highest resistance, and we have a lot of 36,000 is where the highest put rating is there. That's where the support is there, and 37,000 has also has got good supports right here. These two levels. This level 36,000, and then this level after that. Now resistance theme is 38,000 and maximum call rating. 37,500 also has got good number of call rating. 0.53 exactly the same. It's neither bearish nor bullish. Neutral. Short build up exactly what happened in the futures of interest also. So that's what the January monthly expiry open interest levels are showing. Right? Big range of 17,000 to 18,000 is what you see, where between the highest put rating place and the highest call rating place. Similar to 36,000 and 38,000 is the range between the puts, highest put and call right points. Look at this. This is what bloodbath is like, right? This across the sectors, big sell-off, including banks, real estate, all sectors sell-off. We'll see that here. Sectoral performance, if you see, 3.5% IT down, metal 5% down, auto 2.6% down, pharma 1.85% down, FMCG 2.3% down. Reality, look at this. It was the darling sector which is shooting up like anything. Cyclical stock, that 6% sold off. It's oversold basically, right? So bearish momentum is what you see in reality. FMCG, pharma, and metal, and also IT. Only auto has got sideways momentum, at least in the short term. So stay away from sectorial picks. Means from the trading point of view, I'm talking about, right? So you can, there is a top-down approach of and identifying the sector that is performing and picking stocks. That cannot be done because all are bearish except auto, which is as of now sideways. So Yeah, wait for the momentum to catch up before you can go for long trades on the sectoral approach. Institutional selling, you've seen that 3,100 crores of selling happened yesterday from the FI. 4,600 happened on Thursday, Friday. So already 15,000 sell-off has happened in 2022 from this month alone. The month is many more trading days left, and hardly any buying is happening from the domestic institution side also. Today also, more than this 4,000 kind of selling might have happened from the FIS for sure. At least 5,000 crores, I would assume. Data is not a doubt. I'll just quickly check if the data has come in or not. No, data is not a doubt. So we'll just continue with the slides. So the dollar is shooting up. Dollar is gaining strength. Rupee is obviously the USD currency pair is weak comparatively, because you can see the green candles up since last several days. Otherwise, sideways, otherwise. So rupee losing its strength, dollar gaining strength, right? All because of the interest rate hikes and inflation and Fed tapering and all that is reflecting the charts. That's it. Crude oil is giving the biggest headache. It is some global crisis in Chechnya and so some Gulf countries. There is some issues happening. Because of that, I would assume that the crude oil is short of and it is at the 85 plus kind of levels, crazy levels, all-time high levels, and this will do more harm for the economy. Right? It would have its impact in all the sectors, obviously. Right? So crude oil has not cooled off till for reason. Gold is still not breaking out, but attempting and at the channel top. So if it is breaking out of the resistance zone, then we could give a clue that there could be a bear market ahead. But as long as it consolidates and then goes back and forth in these levels, it may be a small consolidation only and not a big bearish market. That's one way of looking at it, but may not be accurate. But normally when the stock market falls big, gold breaks out and goes up, just like in the COVID times, which has not happened this time, right? So now US markets are sort of big, and 440 points is down on Dow Jones and Nasdaq. So this is as of Friday. Today opening has not happened with Dow Jones and Nasdaq and S&P 500 also is all. It's all European markets. All markets in the globe will be impacted when the US markets got hit and it is correcting. So that is exactly what is happening. Two actionables. One is Tata Steel is having a head and shoulder pattern and it is at a neckline. Watch out for this. In case there is a red close that is happening below this neckline, that could be indication that it can give good profits. And so the momentum also, that by that time, if it breaches, it would be in the bearish zones. And so watch out. It's only a potential trade, not a trade. Only if the breach happens, confirmed trade, then you should take the trade. So another one is tech IT stocks are selling off big because of the US correction. So this may have more to shed, and the momentum has dipped to the bearish zones. Trend is turned bearish. Volumes are all red. Price action patterns, Bollinger Bands, everything is indicating continued bearishness. Right. Watch out for the support zones. Mark them on the charts, and then trail your stop losses. The wrap up is that it's a moderate bearishness in the short term, is my view. The reasons obviously support resistance levels, the price patterns, momentum trend crossover to bearish zones, institutional heavy selling. All of these are reasons. Now, global gives in the US markets were bad. Dow Jones falls nearly 7.5% from the top. S&P 10%, Nasdaq 14% from the top. So that's we cannot solely be up and trending up always when the mother market is falling down, because the FI money is all flowing from there, right? So if FIs are selling, then obviously the market will fall, right? Retailers can be resilient and then keep buying, when the participation increases, but there is always a point where it, when 5,000, 6,000 crores of selling is happening single day, retail buying will not suffice to that, right? So that's exactly what is happening. So the positive factors, if you look at it, is that there is a bounce that happened. Some buyers are still there in the market. That is positive, and the BANKNIFTY is at a 50 DMA support, although it has breached 20 DMA support, right? So that's two positive things. And VIX is short about 21 and 23 nearby levels, and you never know when it will mean reward. So cautious on the position sizing or stay away from the trade is what you can do at surprise volatility levels, that can take away all the profits that all in a matter of few seconds. And intraday directional trades can give benefit buying and selling both, right? With tight stop loss or hedge positions if you're playing. Or hedge positions would involve using the vertical or calendar spreads and strategies like that. The risk is defined, and then quick reversal will not harm that much, and so that's the way to go. So moderate bearishness is the view as of now from short term for tomorrow, right? And so that's what, if that this slides or this video would help you to frame your own view on the market and your own trade plan, then consider it a like button, share difference and clicks. Thanks for watching. Happy trading and happy learning. Bye.